The markets are buzzing. Wednesday, March 19, 2025, witnessed a remarkable surge in the S&P 500. It soared by 1.08%, closing at a promising 5,675.29. This impressive climb was mirrored by the Dow Jones Industrial Average, which surged by an impressive 383 points to close at 41,964.63. The Nasdaq Composite wasn't far behind, boasting a significant 1.41% increase to finish at 17,750.79. This widespread rally across the board is a clear signal. Investors are feeling good. They're excited about the Federal Reserve's recent decision. All sectors in the S&P 500 closed in positive territory. Energy, information technology, and consumer discretionary sectors were leading the charge. This broad-based rally indicates growing confidence in the market. This surge in the S&P 500 and other major indices is a strong indicator. It suggests that investors are interpreting the Fed's decision as a positive sign for the economy. The question is, will this bullish sentiment last? The Federal Reserve decided to maintain the federal funds rate at its current level of 4.25% to 4.5%. This decision, while anticipated by many market analysts, has fueled a wave of optimism. Why? Because it signals the Fed's confidence in the economy's ability to weather the current inflationary storm. Federal Reserve Chair Jerome Powell, a key figure in shaping monetary policy, used the word transitory to describe the potential inflationary effects of new tariffs. This suggests that the Fed believes these inflationary pressures will be temporary, easing concerns about runaway inflation. However, the Fed's projections for 2025 paint a slightly more cautious picture. They anticipate 2 rate cuts, reflecting their view of lower economic growth and persistently high inflation. This raises concerns about a potential stagflation scenario, a combination of stagnant growth and high inflation. The market's positive sentiment was clearly reflected in the performance of key stocks. Nvidia, a tech giant, saw its shares climb by 1.8%, breaking free from a 2-day losing streak. This uptick suggests renewed investor confidence in the tech sector's growth potential. Boeing, the aerospace giant, witnessed an even more dramatic surge. Its shares soared by an impressive 7%. This surge was fueled by the company's CFO's announcement of plans to ramp up deliveries, reduce cash outflows, and improve overall efficiency. These positive developments in key sectors like technology and aerospace, as demonstrated by the performance of Nvidia and Boeing, are further evidence of the market's positive reaction to the Fed's decision. Despite the recent surge in the S&P 500 and other indices, it's crucial to acknowledge the prevailing uncertainty in the market. The CNN Money, Fear and Greed Index, a widely followed barometer of investor sentiment, currently sits at 22.4. This reading, while slightly improved from its previous level, remains firmly in the extreme fear zone. This indicates that despite the recent rally, investors remain cautious. Economic data points, such as the 6.2% decline in U.S. mortgage applications in the second week of March, highlight the fragility of the current economic recovery. The market's reaction to the Fed's decision has been overwhelmingly positive. However, it's important to remember that market sentiment can shift quickly. Factors such as inflation, interest rate movements, and geopolitical events can all impact investor confidence. Investors should remain vigilant, carefully assessing both the risks and opportunities that lie ahead.